They say 95% of traders fail within the first year of their trading journey.
Forex trading is the hardest way to make easy money. In Forex trading, there are so many ways of making money. The first way, which is the real one, is Forex trading. Like the real one, you trade, make profit. That account is not like for flaunting. That account is called a PR account or a promotion account or a test account. So the broker actually usually gives some of those Forex influencers so that they can test the market condition of that broker before deciding to work with it. When you make profit in Forex, it is as a result of discipline, of being disciplined. When you make losses in Forex, it's as a result of you being indisciplined. Second way is selling courses, as I've mentioned. You can sell a course. If I get 100 people, they buy my course with $100, that's $10,000. Haven't I made money? That money is able to fund me a flight to go to South Africa, flaunt again, get more students. The third way is I sell boats. I can make a boat. Either it makes profit or not, I can still sell to you, pay me $100, and I will have made my clean 100 without any struggle. Another way is selling signal. I wanted to flip that account. By my next birthday, I could buy a BMW.
Chacha, they say 95% of traders fail within the first year of their trading journey. Yes. Why do you think most of them fail at the beginning of the journey?
I think the statistic is correct. The 95% of traders will fail, retail traders will fail. And I think the main reason is because the retail traders will take trading as gambling. They think that is something that you can enter today with $100 and by tomorrow you're already flexing with the Lamborghinis and plenty of cash, which is not the case. It is a skill that requires discipline, time, and put more work into it.
Okay, I want to ask you something. When you started trading, when did you fail and why?
I think the time I failed was I was in campus back then, and I had placed this goal. My account was $4,500, and I wanted to flip
$4,000.
Yeah, $4,500, and I wanted to flip that account. By my next birthday, I could buy a BMW. But unfortunately, due to market condition, I blew all the $4,500. That was my lowest point in Forex, and I thought of quitting, but the journey continues.
How do you manage to keep going despite facing the ups and downs of failing?
I think the thing that motivates me is that if I think, for example, today I placed $4,000 in my account and I lose it, and I was maybe on a buy on gold, I usually think that there's someone at some place who had placed a sell on the same trade. So he had made a profit from the trade. So it was my analysis that was wrong, not the market that was going against me.
Is Forex trading a business?
Actually, it is a very, very, real, people actually go to the university to study trading Forex. And what is happening here that you can learn Forex 3 minutes on TikTok and you start flipping money, that's not the case. Forex is a business. So you'll have a business in which way, you will have to calm down, study, a full course, study a full course, commit yourself into that business, and commit to making small profits either monthly or quarterly or yearly, like the normal business. So trading is a business.
Let's construct it from scratch. It's my first time. I'm coming across Forex, right?
Yeah.
I've never heard of it. Someone introduces me to it.
Yes.
I'm in Kenya. With all the hype around Forex, where do I begin?
So being a Forex trader is the most boring business. Forex trading, I usually tell my students that Forex trading is the hardest way to make easy money. You know why? It is the hardest way to make easy money. So in this concept that you will have to come down, start from the beginning, which most retail traders fail to start from the beginning. They want to jump into Forex immediately. They know how to place a buy and sell on MT5. They go and start placing buy and sell like Aviator. That's not the case. Just like the way you will want to do a bachelor's degree in medicine, you will have to begin from introduction. Then from introduction, there is theory part of it. Then from theory, you will have to go to practical. On that practical, you will not be operating on real human. Maybe there is a lab rats that you will use. Maybe you will go to morgues and operate on dead people. The same way in trading, there is theory part of it. Introduction, theory, learn the whole theory. Then there is something called demo trading. You see, some people usually think that the demo account in Forex is usually for flaunting. No, it is for demonstration. Demo is the short form of demonstration. So whatever we've learned in theory, are supposed to go and demonstrate it on demo account.
On demo, let's stick there on the demo and the live account. You open a demo account. Okay, I have demo accounts. I've done this once. So you open a demo account. You are given $1,000 or $10,000, right? Then you're going to fund $50. Let's be honest. Does demo trading help with risk management?
So I usually advise my students whom I'm teaching Forex, if you want to open a demo account so that you can practice on it. In most of the brokers, they usually give you an option to put the amount of dollars you want to be in the demo account. So the amount that you are putting in the demo account, let's say $50 or $1,000, let it be the amount that you are going to fund on your live account. So if I funded $50 and I'm going to fund on my live $50, I will transition the same skills that I've acquired on demo account to the live account. But if my capability to fund a live account is $50 and on demo I'm trading $100, that doesn't reflect. Here you'll be opening a lot of one, which will not be the same case on a $50 account.
Okay, I'm able to fund $500 on my live account. And I'm also in a place, or I'm able to purchase a funded account, right? Should I open a demo account that has $500, or should I open a demo account that has $200 so that I can learn better risk management?
Yeah, open the $200 account, demo account. So I will repeat the same I've told you. If you know that your capability to fund a live account is $200, that's the same amount you should request on a demo account. So that the same risk management will be applying on this $200 account, we will apply it on the live account. So like there will be a lot of discrepancy of you trading on a demo of $100,000 and on live you are going to fund $50. The risk management on a $100,000 account will not be the same on a $50 account. So make sure the amount you are trading on a demo will come to rhyme on the amount that you are going to fund.
We are told Forex is going to take, like, okay, it's literally making millionaires right now, but now I want us to filter the noise in this country. I saw there is a South African trader, forgotten his name. He was watching a video of a Kenyan trader, then he was explaining how you can work with the broker, then the broker changes the demo account to become a live account, so that you can see someone flaunting an account of, let's say, $30,000 that he has lost 100,000, or he has lost close to $1,000 or $2,000, and is able to just live normally. Let's filter this noise.
So to start with that, let me tell you, Mr. Derek, that account is not like for flaunting. That account is called a PR account or a promotion account or a test account. So the broker actually usually gives some of those Forex influencers so that they can test the market condition of that broker before deciding to work with it. They test like the execution speed, the spreads, and the not withdrawals, but the execution and the spreads. But those Forex influencers will try to use that to flaunt and tell people that today I've lost $200,000 and I'm very okay with that. And that will transition wrong mentality to beginners who want to study Forex, because they think like, what if today you lose 200,000? How will I live? That guy is living normally, which is not like a live account. Kindly, do not be fooled by the online noise that is happening. I usually tell traders, Forex cannot make you a millionaire.
Why?
Forex can make you a millionaire if you're already a millionaire. This is how it works. If today I have 100,000 Kenyan shillings and I want to enter with it in Forex, start trading, for me to trade that account, 100,000 Kenyan shillings account, risk-free, like the risk is very, very minimal. I can be able to take that 100,000 account to 300 times 2 or times 3 of that account. That's 200 or 300,000 annually, not daily, annually. You see? So the same case, a millionaire who enters with 1 million, he will be able to make 2 million or 3 million. But there is no way you can take account from 10,000 Kenyan shillings to 1 million overnight. If that could be the case, especially if that could be the case, the top richest people in the world could be day traders, but they are not there, even in top 100.
How am I able to know that this account has been is a PR account?
So first of all, for you to differentiate, like that's like asking like how do you differentiate real traders from gamblers?
Yeah.
So in trading, the first thing when I start teaching my students, the first thing that you're supposed to do is to protect your account. Because if I blow my account today, I'm not going to get funds to trade tomorrow.
Yeah.
So the first rule of Forex trading is protect your account. So if you see a Forex trader online, there's something in Forex we call full margin. Full margin, buy Lamborghini, buy Ferrari. That is not trading.
No risk, no reward.
No. There is something called a risk. Risk to reward should be like something reasonable. I'm risking 1 to get 2. But there is nothing like risking all to get 1 million. And then if you are risking all, there is a higher chance of you losing it. Even if there is also another probability of you gaining.
Yeah.
So I better risk. If I have 100 shillings, I'm risking 1 shilling to get 3 shillings. That's something that even if I lose 50 times, I'm still going to remain with 50 shillings in my account. But what if I risk 100, all of which? It means tomorrow I'm not going to have anything in my account to trade. So Forex, the first rule of Forex trading is protect your accounts.
I want to ask you a question that everyone asks. If people are making money from Forex, why are they selling courses expensive?
Let me repeat this. In Forex trading, there are so many ways of making money. The first way, which is the real one, is Forex trading. Like the real one, you trade, make profit. Like today, I woke up, I traded on gold, I made $300. I closed and I withdrew everything. I'm waiting to tomorrow. That's the first way. The second way is teach people. And this actually, it is a very small percentage of traders who are making real money. Most of them are not online. So the rest of us, most of these guys who are online, who are like overhyping the Forex lifestyle, those flaunting of money, cash and big cars, new cars every month, that at some point, 99% of them are not real. Only a few percentage. So real traders are indoors. They are trading with big accounts. That is the first way of making money in Forex. The second way is selling courses, as we've mentioned. You can sell a course. If I get 100 people, they buy my course with $100. That's $10,000. Haven't I made money? That money is able to fund me a flight to go to South Africa, flaunt again, get more students. The third way is I sell boats. I can make a boat. Either it makes profit or not, I can still sell to you, pay me $100. And I will have made my clean 100 without any struggle. Another way is selling signal. So you have a WhatsApp community or a Telegram community where you share people your setups or signals. Some of them are authentic, some of them are not.
Now, they are real. As per you, we have real Forex traders in Kenya.
Yes.
And I can say maybe they are not online, most of them.
Yeah.
And if they are there, they are very few.
Yeah.
And then we have these people who now sell courses, sell signals, and bots.
Yeah.
Now, if someone is selling a course, and that means he has learned Forex.
Yeah.
Theoretically.
Yeah.
So, if he's selling me a course and he understands Forex theoretically, why shouldn't I buy it? Or what's now the remedy?
So, with me, I believe that in most of the cases, you don't have to be taught on how to trade Forex, because personally, I was just introduced to a concept by someone called Helen Gitonga. She just introduced me to the concept. And then it is my personal interest that pushed me to continue learning and doing more research, because everything actually is there. Everything is available online. What you need is an authentic mentor to take you through. You see? So for example, instead of you going to take 3 months to study, you can just come to me. It takes you within 1 month. I simplify the concepts for you to the best way, to the best language you can understand. You see? But now, most people have tried to make that a business. They are not trading Forex, but they are selling the course. Just coming up online with the new literature. See, all these concepts in Forex are the same. They are the same. It's just that if for you to get that attention, you must come up with the new literature. Maybe a bot or AI trading. Because I know people, most of them are having this more interest in AI. So when they hear AI trading is a new concept, so they want to jump in. So another influencer will take advantage of that and start selling people AI trading, which mean if actually it is working. For example, me, I usually tell myself, if there will be a day we'll discover a strategy that is working 100%. Currently, my strategy is working 80%. But if there is a day we'll discover a strategy that is working 100%, and if I have a bot that is working 100%, you will never see me online. I will delete all my accounts. You only see me while we passing by with a Lamborghini or a Bugatti.
Now, I think most of us have lost money in buying courses, and sometimes it's hard to distinguish between a legit Forex trader or a legitimate Forex trader and a scavenger.
Yeah.
In your classes or in people you interact with, how are you able to guide them to know that if I'm buying a course from this person, this is not the real thing?
With me, in most cases, actually, I have a Forex Academy called Chacha Forex Academy. Started back in 2022. But currently, I'm taking people above 30 years old. I don't take Gen Z. I don't take anybody below 30 years. Here is the reason. Here is the reason. You see, if I take a Gen Z, I want to teach him Forex today, he will come up with that dream that he has seen in the media, or she has seen in the media, that people are entering Forex 1 year. They have a Mercedes, they have a convertible, such things. You see, which is not actually the case. You can't flip. You can flip today $100 to $1,000. Yes, it is possible. I've once done that. I flipped 100 to 5,000. But I can't remember any time that I've ever done that again. You see? So that can happen by luck. And actually that is not trading. That is gambling.
Okay.
So the reason as to why I prefer teaching senior members Forex than the Gen Z is that these people have experienced life. They've experienced business. They know the power of compounding. Okay. So if I teach a certain a guy who is maybe 40 years and he has been into business and he has learned the skill, I've taught him the skill and he have acquired it, he will deposit maybe $2,000. Then that guy will be targeting, because currently if you consider in the current economy, let's say Kenya, there are different investments options. That is, we have money market fund, we have treasury bonds, we have so many. You can even buy shares and stocks, IPOs. All of them are there. And the one that is giving the highest return annually is usually around 10%. So if I teach a 40-year-old guy Forex and he funds $1,000, he's going to target to make at least 10% of that account in 1 month. That's $100, which might not be the same case with a Gen Z who wants to buy an Audi within 1 month. Okay. So that's why I prefer teaching the older members of senior citizen. I will call them senior citizen Forex.
These are two mindsets.
Yeah.
The young mindset, the old mindset.
Yeah.
One understands the power of compounding. The other does not understand the power of compounding.
Yeah.
Now, what if you got a Gen Z, and first of all, before teaching them the basics of Forex or the concept itself, take them through the concept of Forex as a business now, so that they can understand the power of compounding?
First of all, you see Forex. Let me start with this illustration. Forex, when you make profit in Forex, it is as a result of discipline, of being disciplined. When you make losses in Forex, it's as a result of you being indisciplined. Okay. So if, for example, you approach me and you want me to teach you Forex, I'll first start by testing you, like your patience. I will send you 7 links for introduction to Forex from YouTube. 7 links, 10 links. Then I require you to watch all of those links to see if you can be patient enough to watch 1 hour video 7 times. Then I will also tell you, when you come tell me I'm done, Chacha, I'm done with this video, then watch them again. Then after that, if you will be done and come back to me, then I say this person has interest. Because it first begin with interest. And then after interest, now you see, like in Forex, is something called, you start by yearning. You yearn to learn, then you learn, then you earn.
How long does it take to become profitable?
I can't say that is I can't say a specific period, because that one will actually depend with their psychology. Okay. You can learn the skill in 20 days. I usually teach people that skill in 20 days. But your psychology will actually determine if you are going to make profit or not. We can have the same skill set, but different mindset. You see, I'm patient, you are not patient. Because Forex, most of the time, whatever we'll be doing is being patient and waiting for your setup to align.
Okay.
So if you're not patient enough to wait for the market to drop back to an order block, you just want to chase the market, you're going to lose the money. I'm going to wait for the market to reach at my order block zone, like my key zone, then enter. I'm going to make money. We have the same skill set, but a different mindset.
Talking of psychology, you won 10 consecutive trades. Like your streak is going win. Now, obviously, I have an ego boost.
Yeah.
Right? How do I maintain this to ensure that my 11th trade is also a win and not a lose?
Follow your rules. In part of my course that I usually teach my students is about journaling and following your rules. If I have a rule that I'm taking one trade per day, if I take that trade, either make a profit or I make a loss, I'm waiting for the next day. Personally, I usually trade during a London session. And if my setup doesn't align during a London session, I wait for the next session. There was a time I went to 2 months streak, winning streak, trading Euro USD, 2 months consecutively without stop loss. And then, at the beginning of the next month, I made my first stop loss. It didn't even bother me. Just went to a restaurant, took coffee, and came back to my house. So, Forex is not a game of ego. It's a game of skill, patience, and discipline. She'll tell people, like, you see, when you're doing Forex analysis, when you're trading Forex, people usually will learn to compare Forex trading and gambling.
Yeah.
But you see, Forex trading is a game of probability. Also, gambling is
a game of probability.
Also, gambling is a game of probability.
Yeah.
But here is what differentiates them. In Forex trading, you analyze the past data to determine what is going to happen in the future. You can't do the same with the gambling. Yeah, you can't analyze that since Man U has won 4 times in a row, it's going to win the 5th time.
Let me give you an example. We are betting, right?
Yes.
Arsenal is playing Tottenham. For the past 5 matches, Arsenal has been beating Tottenham. Check the squad quality. Arsenal is better than Tottenham. You check the previous 5 games, Arsenal has been winning against all the teams. Tottenham has won 1, lost 3, drew 2. Means this squad is better than this. Have I noticed past data to predict the next game?
It might not work because on that match you may find that one player had got injuries or had quarrel with a girlfriend or wife. But with the Forex trading, there is a lot of factors you have to consider before taking a trade. It comes to what you call analysis. There is technical analysis, which is the main part. There is fundamental analysis. Then there is sentimental analysis. You see?
Yeah.
So, in most cases, you have to wait as a disciplined trader. You have to wait for all of them to align. You have to wait for inflation data to be given by the Federal Reserve of the United States. You have to compare that data, the GDP of a certain country, and the CPI news. Wait for them to be released. And what is the sentiment? When I speak about the sentiment, I mean, like, for example, right now we have the US-Iran war.
Yeah.
That is happening. That sentiment enough is able to guide you where the market is heading. Now, once you know where the market is heading, you come now to technicals. Has it like broken the previous swing high or swing low? Then you combine and you take a trade. But you can't do that with the gambling.
Okay. There are people whom we call market movers,
Yes.
big institutions, the banks, the hedge funds, and all that. Is the market rigged, or we just don't understand their game? Because, okay, there are 4 concepts which we'll talk about later. There is market structure, there is order block. What's the other one? I forgot the name. There is order block, there is market structure, whereby when you check an order block, you might have an extreme order block, right?
Yes.
And then you might come and have a mini order block,
Yeah.
right? The trading Greek was saying you should not target the extreme order block. You should target the small one, like the mini order block after the extreme order block. So, as a beginner trader, I'll see an order block. I wait for the trade to come to the order block, either mitigate it, enter a trade. But now there are two order blocks. So the trade decides to go and hit the other order block before it goes my way. So it means it will hit my stop loss, right? Before I trade. Now, since I'm using the data to analyze and I'm not able to understand this, does it mean the bigger fish in the market have rigged the market?
Previously, I can say there has been some rigging in the market. Especially, there has been a lot of cases of insider trading, especially with the Trump administration. Because we'll find I think last week on Monday, at 6:20 a.m., there were so many trades, short trades on oil that were placed like 20 minutes before Trump announced that there were peaceful talks ongoing between Iran. So there has never been so much volume in the market at 6:20 a.m. I think New York time. There has never been such big volume. And it just happened like 40 minutes before Trump announced. So it means that there's some rigging happening. And at some point last year, Trump's son, actually, there were some cases that Trump's son was on short on BTC before Trump announced that he's going to impose tariffs on Iran. But that's why usually I come to this point and advise traders that usually trade Euro USD. I believe I'm the best Euro USD trader in Africa. Here is the reason as to why I consider trading Euro USD. Euro USD, in a day, there's 7.7 trillion US dollars traded in the financial markets. And Euro USD takes 24 to 30%. So it is very, very hard for even the bigger institution to manipulate Euro USD.
So gold USD is
Gold, I can never advise beginners to start with it. I personally, from experience, what it has done to me, what it has done to my friends, I can never advise beginners to start trading gold. Gold can give you easy money. At the same time, gold can take away more money from you. So it's better you have something that is sure a bit. Like, for example, if I say Euro USD, in most instances, it will respect order blocks, it will respect fair value gaps, which cannot be the same case with gold. Gold can move with candlestick 10,000 pips. Actually, it happened. I think it was January or December. In one day, candlestick moved 10,000 pips. Even if we are trading with 0.01, it could have liquidated a $1,000 account.
So gold is riskier.
Right. Gold is the devil, is the sister to the devil.
Most people trade gold.
Most people do, actually online. You see, for example, if today come online and tell traders that I'm trading Euro USD, they will not be interested with me. They will move to those people who are trading gold, because gold will give you more pips within a short period of time. But actually, those pips will determine in which direction you are. But if, for example, to give you 100 pips, maybe buy. What if you are on a sell? It will have taken away from you 100 pips.
So gold is quickly profitable.
Yes.
Compared to Euro USD.
When we say quickly profitable, also put that concept of losing money. So you can gain money easily and lose money
easily.
Yeah.
Now, before we get into, you've said somewhere at the back, there has been rigging of the market.
Yeah.
How do you keep yourself up to date with such data?
Risk management. You see, even if they rig the market, even if like, right, let's say I was buy on gold, and certainly you hear that US has bombed Lebanon or has bombed Iran, you see? If I had proper risk management on that gold, it means, when I say proper risk management, it means I've risked either 1 or 2% of my account, and I had a stop loss. So that market will come and to my stop loss, and I will be out of the market. Actually, people take stop loss in a negative way, but stop loss is used to limit you from getting further losses. It's not used like to make you lose money. It is to prevent you from making further losses. So it will take me out of that trade. And since I have a rule that I take 1 or 2 trades a day, I will be out and wait for the next trade, which is the next day. But for a beginner who does not observe risk management, it means he will have risked, either he has gone full margin and the rigging of the market has happened. So he will retrace back, there's no stop loss, because someone who has gone full margin cannot have a stop loss. Because we've opened around 20 to 30 position. And the MetaTrader 5 does not have that option of putting one stop loss and it applies to all trades. You will have to put for each and every trade, which is not possible in case of a full margin. So if you don't have proper risk management, especially with the current unstable financial markets with the Trump administration, Netanyahu, it is very easy for you to get liquidated. So proper risk management usually emphasizes that proper risk management. First rule, protect your capital.
Always.
Always.
Now, let's talk about over-leveraging. Is it a tool for growth or a suicide note for a Kenyan beginner trader?
So over-leveraging, first to begin, I usually encourage my traders or my students to use 1:400 leverage. Most brokers will offer you 1:2,000, 1:3,000 leverage. But actually that is to motivate you to go full margin, and which it may lead to you blowing the account or flipping the account. So over-leveraging can be a suicide note if you take it in a negative way. Like it gives you that power to open more position. But remember, the more it can help you magnify your profits, can also help you magnify your losses, depending now on how you use the leverage.
Okay.
But some people will have to wait, people who are very patient and disciplined, they will have to wait for their A+ setup, plus combined with a higher leverage. For example, there's some brokers who offer unlimited leverage, and they will go full margin, and they will profit from it. But some people will just enter without even doing market analysis or any confirmation. You see, in Forex trading, there are some entry confirmation that you must consider.
Okay.
First of all, can be candlestick confirmation. Is there maybe something like a doji or a bullish engulfing? Another thing can be a retest in a key price zone. Can be either a liquidity zone. So some people will just enter without even without those confirmations. That's why it is important to journal. Because today, if I journal that I entered this trade because this market had retested a key price zone, and there was a doji candlestick or a bullish engulfing, then I do that consistently over a week or over 100 trades, and I say that this trade is aligning perfectly and it is giving me a good win rate. I can say this is my my trading model, trading strategy. But most people don't journal. That's the boring part of it. They will only journal when they've made profits. But if they made a loss, I don't want to include a red in my journal, so they won't journal. And that's not like a mindset of a trader. You should stick to your rules. Is that today I'm waking up at 10 a.m. in the morning, take a trade on a euro or gold, and then either profit or loss, wait till tomorrow, and then I have to journal it. But most people don't do that. I usually tell people there are 3 sessions in there in a day.
Yeah.
There are over 500 traded pairs in the market, you see? And there are over 100 strategies available online. So it's upon you to choose one session, one pair, and one strategy, and build on it.
So you cannot say I'll trade London session, I'll trade New York session.
You can trade both of them. As much as your strategy aligns with it, you can trade both of them. But you see, people keep on jumping. You jump from this strategy to this, jump from this session to this. You see, when you jump from one strategy to another, you reset your learning curve. So if today was 40% in learning ICT, then tomorrow I see Derek trading SMC. Then I jump to say SMC. It means I will have to leave what I was doing and then come and start afresh. So you are resetting your learning curve. So it's better you stick to something, refine it, trade that thing, journal it, refine it, and backtest it. Then you can come up with a higher win rate. And you do that by being consistent with what you are doing. Not today entered because there was an indecision candle, which is a doji candlestick. And then tomorrow I'm entering with another different kind of confirmation. You are not consistent with yourself. Trading is all about consistency. If today take this trade on Euro USD, will you still use the same market condition to trade tomorrow or next week or on Monday? Because if you are not doing that, whatever you are doing is gambling.
If the internet in Kenya went off for an entire week, you are not to check your MT form, you are not to check your MT5, you are not to open the trading view or your broker's account. What is identity outside these charts?
Derek, trading is what I do. Trading is not what I am.
Okay.
So it means if like I use trading as my identity, like what I am, any minute without checking the charts, it will give me like that tension, what is happening in the market. But since it is what I do, and I have proper risk management. If the internet went off, I know in my 95 I had the stop loss and I had the take profit. So either way, the market will hit one of them. Either stop loss. So it means if it will hit a stop loss, I will have protected my account from further losses. And it will have hit my take profit. I will have taken my profits from the market without the market retracing back or closing me behind.
There is a swing trader, a day trader. What's the other type of a trader?
Scalper.
A scalper. Now, as a beginner trader, actually I had this sentence somewhere. I think it was Ask Sidno saying, he feels pity for people who want to start learning Forex now.
Yeah, I feel pity for them because there are so many like Forex traders. Actually, most of the beginners actually fail because they learn Forex from Forex influencers, not Forex traders. Just because I have 200,000 followers in my TikTok and I'm posting charts doesn't mean I'm trading Forex. As I've told you, there are so many other ways to make money and despise it as Forex. So, most of the beginners will fail by learning from Forex influencers because Forex influencers are doing it for the views. And in most cases, you'll find that those people, even with below 10,000 followers, they are the one who do real trading. The rest are just overhyping. And there is another reason as to why beginners will fail, even in their first month in trading, is that someone will join Forex to trade their dreams. What do I mean by trading your dreams? You've seen a certain Forex influencers flaunting cash every Friday is in a 5-star restaurant, taking flights often, maybe once a month or twice a month. So when you start trading, you will start trading that lifestyle in your mindset. You are not trading the markets, you are trading your dreams. And when you start trading your dreams, there is a high chance of you eliminating your account. If you are trading your dreams, you will not wait for that market to retrace back to another block or a fair value gap. You'll be targeting that $2,000 to buy an iPhone.
Would you advise someone to be a swing, scalper, or a day trader?
For someone to be a swing or a scalper or a day trader is upon by their personal decision. You see, it all comes back to your psychology. I personally, there's no way I can hold a trade for one day. Never, never. I can never do such a thing. Because personally, one of my other side is I'm very impatient. If I want something, I want it now, like it's happening right now. The maximum I can hold a trade is 2 hours or 3 hours. That's why I came up with my strategy called the CRW model for trading Euro USD. Maximum 3 hours. But sometimes you can even exit the trade within the first 30 minutes. Usually target 20 pips per day. 20 pips sure bet. Risking 2 pips.
Very soon, guys will be trading that model live. Now, as we close up this, what is the one truth about markets that you wish you didn't know?
Truth about market. There is no shortcut.
You wish you didn't know that?
There is no shortcut in Forex trading.
Okay.
It's either you come, sit down, learn through the process, and start trading your own account. There is no like a simple strategy or an easy strategy. All strategies work. It will come back to your psychology.
Let's say, for instance, right now there are these things called prop farm accounts. So I have learned Forex. I have like $200 to invest. And also maybe someone else comes and tell me, you see this $200, buy a prop farm account where they will fund you like $4,000. So someone is confused. Do I just invest this on my account or do I take the prop farm account at $200? What is the best advice?
So actually prop farm are there to help you scale your capital. Let's say for example, there are some prop farms which sell $5,000 account for $30. So it means now you have access to larger capital, but that doesn't make you profitable. You see? If you are unprofitable in your $50 account, doesn't mean you're going to be profitable since you have a $10,000 funded account.
Okay.
So they give you access to larger capital, but they are not there to make you profitable. Actually, most of all pro firms are there to fight against you, because pro firm will pay you. They pay you. The account you are trading on a pro firm is a demo account. So how do they pay you? They pay you from the money lost from those people who have failed the challenge phase. So if I bought if I used $100 to buy a $10,000 account, then I fail, that $100 will be used to pay the other person who has reached payout. So that's how Profam works.
Kindly, let's go back.
Mm-hmm.
I buy a Profam account at $100.
Yes.
Then you think that's a demo account?
That is a demo account. It is just a demo account with like live market feeds. But it's a demo account. So you're trading on a demo account, but the money you are going to be paid is from those people who have lost. Actually, Profam operating on this analogy that 95 to 98% of retail traders lose their money. So if today 100 people buy a Profam, 99 of them are going to fail before reaching payout. And the remaining 1%, 95% of them will reach for payout. So then, for those who have lost, the 99 who lost, their money will be used to pay the 1% that have reached the payout.
So I should not buy a Profam.
You should, if you have a really workable strategy, Profam is a really good way to scale your capital. But if you don't have a real trading strategy, even if you have access to 100,000 in funded, you're still going to lose that account.
Now, if you could go back to the day you opened your very first demo account and whisper one sentence to your ear, what will that sentence be?
If I could go back,
open your first account, like you are literally green on Forex. Someone has just introduced you to it. You now go home, say, okay, you see the same way someone introduced me to YouTube, and I was really curious, so I went and opened an account. And then I did my first videos, very noisy actually. I did it by the beach. And then now you are there, you have opened the charts. Someone has also introduced you to TradingView. You have gone there, you have opened. Someone has told you about Euro USD, gold, the Canadian dollar and all that. The major pairs, the minor pairs, you have all that information. And there you are.
As a beginner, what I can advise a beginner, if you are a beginner in Forex trading and you want to start, like today is your first day,
Yeah.
Learn CRW model for trading Euro USD. CRW is the easiest trading model you can ever learn in the market today. And it is 86% profitable. Learn CRW model. There is nothing else. The rest are overcomplicated terms. CRW just learn in less than 1 hour and you're good to go.
There are 4 things. Actually, he's teaching me. Now, there are 5 things he told me, and I want him to tell us why they are important, though not in details. Fair value gap, smart money concepts, market structure, DXY. By the way, I've never heard of someone say about DXY.
If you're trading any pair that is paired with the USD, you must have knowledge of DXY. DXY is a dollar strength index. It measures the US dollar against at least a basket of 6 currencies. Yeah. That's including Euro, Japanese yen, Canadian dollar, Swiss franc. So you must have knowledge of that. Because if the DXY is on an uptrend, it means that dollar is gaining more strength. Yeah. So if there is any pair that is paired with the USD, it means that pair, it will affect that pair. Yeah. Majorly it affects Euro USD. As I told you, I'm a big trader of Euro USD. I'm a big fan of Euro USD. So those concepts I introduced to you about fair value gap, about inverse fair value gap, about order blocks, it all comes back to what we call liquidity. You see, you can't trade. I usually tell my students that before you enter into the market, identify where liquidity is. If you don't see the liquidity or the liquidity. So there is something called internal range liquidity and external range liquidity. Yeah. Internal range liquidity is an example of order blocks and fair value gaps. And external range liquidity is an example of equal highs or equal lows or a major swing highs and swing lows. So you must have that concept. And when we're speaking about market structure, is it like actually the trend of the market? Is it uptrend, downtrend, or in consolidation? You see? I usually tell students, make sure you're flowing with the current. The trend is your friend. If you go against the trend becomes your enemy. The market becomes your enemy, and you're going to lose your money.
Wow. Now, you people should tell me when you want to learn the CRW model. We'll figure out how to do it live. Actually, I've been learning Forex. Actually, the same lady introduced Chacha to Forex. The same lady introduced me to Forex. But for me, I decided to take a break because I saw it was very complicated. You go to Baby Pips, there is this entire course. And you said there is a university.
A university, no, I have an academy.
Yes, but now you said there are people who go to university.
Yeah. In the US, actually, we don't have that curriculum in Kenya. But in the US, people actually go to learn the financial market called foreign exchange. You learn the whole course, like a bachelor's degree in foreign exchange, to trade the financial markets. It's just that people in Kenya here take it so lightly that you can just learn with the 4 minutes video on TikTok and start placing buys and sells on MT5. That's not the case.
Now, where can people find you and get the work you do? How can people contact you?
Oh, on all my social media is Chacha Forex Academy. On Instagram, Chacha Forex, TikTok, Chacha Forex. On LinkedIn, you can just Chacha Rioba. I'm just there with a very big following.
Okay.
Yeah.
And ladies and gentlemen, that marks the end of this conversation. I know it's not yet complete. I will have a part 2. I'll really need to have a part 2. Like today, I just wanted to get the basics of what Forex is, how to get into Forex, how to be able to filter the noise in this country, because we see a lot of people flaunt. I have a friend of mine, 2 years down the line, he has bought a Prada. I'm like, man, this 7 million, how can I get it? And here you are, people are telling you, by the way, this is the way to go. And now there is even AI. Have you tried AI in trading?
No, I haven't. But I'm trying to learn it. And then after that, I will come up with tangible knowledge
about AI.
Yeah.
At that point, that marks the end of our today's conversation. I'll see you on the next episode.